I read your note, and it looks like the big theme was competition from mainly Adidas. Hasn't that been the story of the entire year and all of last year, too?
Yeah, if you look at Nike, it was one of the worst performing Dow stocks last year. We actually use data analytics in our research process, and for over a year, we've been tracking the share shifts between Adidas, Nike, and Under Armour in the running and basketball categories. And Adidas last year gained share primarily through the Superstar and Stan Smith platforms. But what we noticed in the data over the last couple months was a real acceleration in the running category for Adidas, primarily around the Boost platform, the NMD platform, and the Alpha Bounce platform. And given those that change to performance-driven products from just fashion-oriented products, which was the rise of Adidas last year, we thought that that's going to create a big issue for Nike in the marketplace over the next couple of years.
How big of an issue are we talking about? Nike is still the dominant player in categories like basketball. It still also dominates the secondhand sort of fashion market. What kind of strides is Adidas making on market share in the all-important U.S. market?
Yeah, sure. I think what's really helpful to show viewers is to size up the two businesses in the North American market where we see the most pressure. If you think about Nike's North American business, it's about a $15 billion business, or about 45% of the total company revenue base. If you contrast that with Adidas, Adidas is only a $3 billion business in North America, or just about under 20% of their total company revenue. So if you think about it, Nike is 5 times larger than Adidas in North America. Nike is obviously the #1 share player, but when #1 share players see share shifts, the effects can be pretty devastating. So to give that kind of flavor of how big Nike is compared to Adidas and all the platform improvement that we're seeing in the performance running category, it could be a pretty big deal over the next couple of years for Nike in terms of a bad thing.
The way you're kind of posing it, Randy, is we're basically talking about roughly zero sum. In other words, it's all about market share. This is not necessarily a growing category. Is that basically your take? And I guess in that context, I know you have some concerns about the fact that, look, Nike as a stock still trades at a significant market premium.
Yeah, great question. So if I think about the category itself, athletic is still a decent category. It is, if you add up the revenues of Nike plus Under Armour plus Adidas, it's been, in total, the industry is growing, let's say, at about a mid-single-digit rate, probably down from a high single-digit rate previously, but still better than general apparel, which is about a low single-digit, let's say 1 to 2% with deflationary characteristics. If I think about the issue here is that we have a little bit of a slowing in the athletic category, but it's still a good athletic category in North America. The biggest issue is going to be, share shifts, to your point. As then it relates to share shifting away from Nike towards Adidas, that creates an issue with revenue growth. It creates potential issues around margins. And then to your point around valuation, the valuation at 22, 23 times earnings can compress.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.